Hi, good afternoon. Today is 31st December 2025, and tonight midnight will be the New Year 2026. So I would like to start with the Happy New Year wishing, and hope everyone enjoyed the year 2025, and best wishes for the next year. From the Corpotex point of view, I'm going to share one gift for the investor, for the professionals, for the tax agent, for the tax consultant, or the any other professional who are interested in the UE taxation. Today, our main agenda is the Family Foundation. Although the Family Foundation stand alone, if we consider from the investor point of view, then is management of the wealth. What is the management of the wealth? Normally, we see in the Family Foundation where they honor as that in a foundation called the settlor. Okay, so he have the funds that he want to keep as a for his family or family purpose. So he make normally the Family Foundation any part of the world, but here we are currently talking about the primarily United Arab Emirates (UAE), and the UAE Common Family Foundation option are available in the DIFC, ADGM, and the REC ICC. Plus, there is a trust option also there. Maybe that in the mainland, more likely maybe the option, but we will see later on what are the trust and how it will be registered. But currently our focus is not about the incorporation part. Even that can also be facilitated in case anybody looking for the Family Foundation or the trust. Incorporation, of course, that also can be facilitated through the PTG consultant. But currently our topic is the Family Foundation from the corporate tax perspective. So this is a very important topic, and where the as a owner or as the settlor or the investor who have the huge investment and through the Family Foundation, and not only it's made the investment in the real estate, one of the sector, but apart from that they can do the investment in the shares, stocks, bonds, and such kind of activities. These are the commonly we seen in the market. Okay, but considering that still we have to ensure the certain compliances what are the applicable on the Family Foundation while we are looking for the transparency as the unincorporated partnership. Because why we are discussing today Family Foundation, because if they wish to set up the Family Foundation and go for the unincorporated partnership treatment for the Family Foundation, because the Family Foundation as per own is a juridical person, but as per the UE corporate tax regulation they can apply for the unincorporated partnership. They will be treated as a transparent. Now the application is not is the first year, but the important part and the critical part that we're going to highlight here, that is that the Family Foundation, they may get the approval the first year. Okay, but the first year we must apply before the end of the first tax period if we wish to go for the transparency. For before end of the first tax period we have to apply for the transparency. So this is the one of the compliance that we have to ensure. Now the second part, even if we got the transparency, but every year we have to submit the declaration, so more likely the compliance check are the from the as a tax consultant or the professional or the tax agent point of view, who have to run the compliance or who have to check the compliance on behalf of the settlor. So this is the practically what are the key areas are required, are seen, and how it's required, what are the framework that would be followed throughout the period to ensure the transparency, to get the approval and retain the approvals. There are two things. to get the approval and retain the approval throughout the family foundation life. So now let's see the key element of corporate tax. Basically this is the overview and that key area we are gonna seen as a highlight, and but practically we are scheduling the one detail on hand workshop where we will cover this by the practical example. Okay, we will see how what are the element and how it will be covered, what to be right, from where to get. So this plus and everything, but this is more relevant are for the tax agents who are already in the practically doing this activity. So this is important for them because they already understand the regulation. Now how practically we gonna apply this is the important for them. Even for the settlor, who's running the trust, or who's the trustee, or who the beneficiary, they are also important for the understanding what are the area, what are the compliances to be ensured. Okay, now our main objective or agenda for this today overview or the of the family foundation, seeing which are the documentation compliances are required, and what are the framework, what are the paperwork, what are the working paper, what are the FTA treatment we have to do. We are gonna see that. So let's dive quickly and see. Instead we will go here in detail the key element of the corporate tax that applicable on the family foundation. Introduction of family foundation under the corporate tax law, then the important condition to be met for the family foundation, multi-tier structure family foundation, single family office or multi-family office structure, overview of the city compliance. Okay, here I'm just quickly reading the agenda part. Compliance for family foundation treated as a unincorporated partnership. Then question and answer. Normally we are running the training part for the professional as a free of cost, as a voluntary basis, as a pay back to the community, because being a PTG consultant, we are registered as a tax agent and tax agency, and plus we are supporting for the corporate services. So these are the vast area we are covering, where we have offered the services from the incorporation till the compliance for the taxation, accounting, audit. So all the area we are covering. So in corporation we are giving the consultancy, which activity that you gonna the activity that investor willing to do, what is the suitable ground, or what are the suitable area, like what that mean the mainland and the free zone, and under the free zone which free zone is suitable for them, and the mainland is suitable or free zone is suitable. So it depends upon the many things. So we are registered with the many free zone as a channel partner, as a authorized reseller. This is also the advantage. We have the experience of the UAE incorporation almost from last 12 years. We are familiar with this local regulation, and now as a part of the tax agent and the agency with the FTA. So now we supporting the investor or the businessman, what are the comparative edge they can take and how they will do the compliance. Anyhow, that's another like that our topic or agenda is the family foundation. Let's dive and see. Okay, here I add the one slide only, that same slide we already seen, but in terms of the theoretical and the practical, it may be take the 2 sessions to cover, but today we are going to see the highlights of what are the key documentation part or the compliance part, or what are the sequential, how we gonna ensure the compliance for the family foundation. So the first is the audit pack checklist. So audit pack is not always the external checklist. Okay. Yeah. So audit pack checklist. So here we're gonna see that what are the documents are required. So in which format is received or not received. Here we just quickly go through the cover and the index, legal reference matrix, because what are the legislation applicable while looking to the family foundation. Document index, founder detail, trustee detail, beneficiary master detail, article 17 gateway test means, so how we will ensure is meeting the condition while testing the family foundation. Okay, so natural person income test. So this is also the important, because if the natural person doing the same activity, so how it will be taxable in their own hand. Natural person business test, tax awareness safeguard. Okay, unincorporated partnership equivalency test. So these are the key areas that we have to ensure while running through the family foundation, the transparency application or the declaration on a yearly basis. Public benefit and the qualifying public benefit entities, participation exemption. So normally the PI exemption criteria, so how it will be applicable under the family foundation, the annual change in the family foundation, the FTA, final FTA conclusion, wherever we are discussing the final FTA conclusion, this is as per our assessment how it will be look like to the FTA. We are not saying FTA is considering in this way. We are saying how considering the application of the legislation it would be look like in front of the FTA. Okay, now the first the objection. I'm starting from the objection. While applying for the family foundation or the application for transparency or declaration, so we have to keep in mind what are the FTA objection might come. Okay, might come is not already there, but we are considering. So what are the key area, or what are the tricky area, or what are the important area, so that we have to keep ensure while considering the family foundation. Might property flipping. The property flipping means the continuous purchase and sale of the real estate. So FTA risk allegation, maybe they will come up and say, okay, this is the fall under the business activity. Now business activity, how they will come up under the corporate tax law article 11. So under corporate tax law article 11, this is one of the gray area or the risky area that we have to keep ensure it would not cross the limit. So long term holding, isolated disposal, key evidence holding period analysis. What are the properties we have, what are the real estate we have, even we are buying and selling, what are the holding period we are keeping normally, because here the FTA concern, maybe we are wrapping up our business activity through the family foundation to avoid the taxation. So this will be the FTA allegation. They have to see whether we are doing the business activity or only the wealth management as per the family foundation. Hold, invest, retain and distribute, the objective of the family foundation, and identifiable by person. So this is the city law. This is the one of the reference where we have to test whatever the property activity we're doing, buying and selling and flipping, mean how frequently we are doing. Status, yes, defensible, we can defend, but again depends upon each activity or each area or each family foundation how they are operate. Without having the further detail, it would be challenging. Now the another common activity that family foundation involve the share trading desk allegation. Okay, they might come up and say this is the again the trading desk. Maybe you are doing the trading of the shares, so you are running as a business activity. Again, we might give our defense through the portfolio investment only. Key evidence, bank mandate, we are running through the bank is having this mandate to run the business, because all this activity is not important. If we are doing, maybe is coming under the taxable activity, but if we run through the agent or through the broker, so maybe then we are not coming under the business activities. But again, we have to see in the detail of the case and how it will work. Here the reference, the legal reference, FTA city guide, natural person, we already we mentioned, highlighted over here. Status, yes, we can defensible, subject to what are the further detail. Next is the GAR rule, general tax avoidance rule. So tax avoidance, this would be the allegation while seeing the transaction. No tax advantage versus the direct holding. So again, here we have to justify, we have to see our transaction. If the natural person doing the same activity by themselves, it would be subject to taxable or no. So if his natural person is doing themselves and is not taxable, Now he's running through the family foundation, so this will be our one of the defense. Again, comparative tax analysis would be there. So this is highlighted the legal reference, the corporate tax article 50. Yes, it's defensible. Now the next is the important is the transparency. Loss of article 17 status, unincorporated equivalency proportion. Okay, the loss means might while doing the activity we exceed the we overlooks or override one of the clause, we not follow the properly, so there is a high risk we might lose the family foundation transparency status. But again, we have to well, even it's not when we submitted is approved, later on again FTA may raise the query. So this is important, the working papers. So our key defense, the working paper, what are the key area that is FTA expecting to be tested or ensure while compliance with the city law. So say the article 17 of the city law, yes, we can defense on that based on the supporting information and document are available. So this is the objective. Why even being a consultant, we are seeing looking what are the FTA objection may come in the future. So we have to prepare our documentation in a same way, in a same way that even whenever FTA come for audit, they might normally give 10 days or 20 days, depends, to provide all the supporting document. So if the tax consultant or the in-house tax professional is not prepared the document, so there is a high risk they might get the penalty. Even they can satisfy, but over the period of time the supporting documents are not arranged properly, so it takes a longer time, so FTA might come on doubt in that regard. So here we are not giving today any opinion, but here we are discussing the critical part. So anyhow, let's move on the documentation. This is the huge list of documents that we have to see in other test. Again here we covered the mention over here the cover and index, how it will be. So we have to see here very important part, family foundation transparency compliance pack. So being a consultant, we are keeping all the supporting document and we are getting the document upfront from the family foundation, the trustee or the settlor, while preparing the application or the declaration. This is the one of the initial beginning. See, all this document is not only how to submit to the FTA, how to start to get the data from the client and submit to the FTA, what are the documentation or test is required. So anyhow, the first, the founder detail we need. So how we will get the detail from the what are the identification, reverse power, control, evidence. So we have to get this detail. Then trustee detail, trustee identification, confirm activity or administrative and proactive evidence retained. See, even tax consultant, tax agent, we have to keep the document. Even we support client as a consultancy part, even non-tax agent. But if we don't have document, tomorrow it come around in a different way. So client or the FTA may raise the query, how you given the consultation in this regard. So as to have the safety, we must keep the evidence with us also. Of course, with the permission of the client, because ultimately we are appointed as the consultant, so we have to run through all the document. So next, the beneficiary master register. So master register here supporting natural person, unincorporated partnership, public qualifying benefit entity or qualifying benefit entity. So we have to see what are the documents required. Article 17 gate test eligibility and continuity. Eligibility is important. On the same note, the continuity also important. So natural person income test. Here the index I'm gonna go through quickly. Then each index have the what are the further applicable documents. Natural person business test, tax avoidance safeguard, UIP equivalency, no commercial personality, activity look through test, asset pooling and versus business, management and control test, distribution versus taxability, annual change log, FTA final conclusion. Conclusion means what we are preparing, qualifying public benefit entity and the benefit with the public benefit entity and qualifying public benefit entity, the participation exemption test. So this all we have the each one separate set of document. Here what are the document index that we gonna request from the client and which are the area to be who will be providing that. So this is the first our starting point when we start the things. Here we already mentioned the use this register to index all supporting document and evidence retained for family foundation transparency file and any Amara tax submission, which means transparency is the one part, but every year that declaration for the same we have to do. Again, the similar document can be used for the transparency and can be used for the declaration. More likely the same objective the first year, and the moving forward we will ensure. Now the family foundation, what are the document actually required from the client? Here, foundation deed, trust deed, charter. And the charter is common terms, trust deed is common terms. So what are this? This is legal. From where we get from the client. Normally, how the family foundation and in the IFC. They appoint as one of the agent who appointed for them as a family foundation who's running all this activity for the truster, for the settlor. So that's why we mention the legal, because this document come from where? From legal. And who will provide? Owner. Source is the, what is the owner? Source, owner, client. Then the period or the date we have to see. Then the storage location and the link we have to see. Okay, then mapping sheet. Okay, see here we very comprehensively mention all the things. Okay, we receive the document, upload to the Mara, yes or no. Okay, here even if you see here we make the drop down menu for our very easiness and this later on to use how we will use. So this is the first part. Let me just make little more because it would be more easy while using seeing the screen. So here we can add the additional remarks as well. So anyhow, here the detailed documentation are there. Founder ID, passport, yes we need. So this is very comprehensive. You can send the client and get the document and start quickly, and we have done a lot of effort on that, but from the professional tax agent and consultant is very handy how to design the paperwork. KYC part, the founder, he will give the founder detail will be there. Okay, the trustee appointment resolution will be there. Governance, again the legal and the governance part, they already have the trustee appointment resolution. You might ask the client to share with us. Beneficiary list and the ID, again the next is the KYC part. Here we call mapping sheet is the beneficiary master list, because we already created this sheet. We will see from where it will get the data. Okay, so then here we put the reference for each document. Beneficiary declaration, no business activity, asset register. See the category from where it will come, but source who will provide. The mapping sheet is also we already linked. So we will go through quickly. Asset register, schedule of the investment, bank statement, foundation, dividend activity. See, all this information is why is important, because FTA require during the transparency when you apply, he will require all the detail. Okay, the mechanism may different, but he asks all this information. Rental agreement if you already given from financial. Okay, trustee minutes and the investment policy, how you are going to do that, the investment, because all this document when you have and we read through and look go through, then we understand where we are standing or where we can give the consultancy to the settlor or the founder or the trustee. Okay, the minutes from where we get normally the agent family foundation who's giving working on for the family foundation. Then the PBE, normally the public benefit entity, and the QBBE, qualifying public benefit entity. So again, from where we'll get the compliance beneficiary entity, beneficiary participation exemption, financial certificate, participation, This is the PI. We will see in the detail where is applicable and why we need annual confirmation or declaration, client compliance. Okay, Imara tax submission. So these are the 15 documents where we have to work. So anyhow, let's see in this regard. Legal matrix. Let's go through the legal matrix also. Why is legal matrix is important? See, the legal matrix, of course, when we are working, so we have to see or keep for our reference also the legal matrix. What are if we need it? Okay, the Article 17 is applicable for the family foundation. Here, whenever we talk about article, most likely we are talking about the corporate tax. So here the federal degree law decision guide reference number is there. So what are the area family foundation we are testing over here? So the law, which clause 17, the law page or reference article text, again we are given the further detail. Key requirement, election to treat the family foundation as per the tax transparency. So primary enabling the purview. What are the objective? Primary enabling the purview. So I'm just a little bit adjusting this, so maybe the first page cover all the information. I'm trying my level best to cover in one page. So anyhow, I believe it will be more understandable whenever you guys look into that. So family foundation again. Now again, another relevant part, the ministerial decision 127 of 23. So which article or clause, article 1 to 6 is relevant. So the section ministerial decision, eligibility, beneficiary, activity, annual confirmation. So this is the important part that we are testing over here. Article gateway test again. Now core implementation decision. This is the key area. This is a very important area that we gonna see over here. Allow me. I'll just I wish to fix in one page. Mostly the law reference we already seen. Okay. Oh, no, fine. Okay, the family foundation. Here, what we are currently. Family foundation, ministerial decision 127. We can read the corporate tax is the common we are using mostly. Now the ministerial decision 127, the article 1 to 6, MD section, eligibility, beneficiary, annual activity, annual confirmation. This is one of the key area, core implementation decision. Then the next is the unincorporated partnership. Look through. This is also the another. See, we are discussing the family foundation, but the unincorporated partnership by default we have to go through and ensure the application will be there. So this will go one by one each section. So here the legal reference, all the detail we already covered. So now the founder detail. So under the founder detail, what we need: founder, nationality, ID, passport, relationship, control. What is the relationship? Means it not important under the family foundation. All the member belongs to the same family. It may be the not relevant, not related to each other directly. It's not important. They must be the blood relative. Okay. So this is another part. And second important part, it maybe is the kid is not born. They can give the identifiable the grandson of 1, 2, 3. Okay. So in future, the identification of the grandson of Mr. A. So then through the grandson of Mr. A, the first grandson of Mr. A. So through that also it is considering as the beneficiary. Anyhow, here the founder detail, actually the trustee detail is here. So what are the trustee detail? Name, type, country of residence, decision making, remuneration, if any, and evidence retained. Then this is the beneficiary register, what I earlier mentioned. Here again, all this document we needed. Here I'm moving the quickly because later on once we have the practical, we make our 2 to 3 hours and we will cover in detail with practical example. Okay, now move to the Article 17 gateway test. Article 17 gateway test. So what are the information is needed? If you seen here, we already put the reference. If we click here, it will take us to the relevant condition. Anyhow, here we already in header also we put the legal reference of this, because even somebody missed, so he can take from here again. Legal form, founder, trust, family. The activity we have to see from the document, not verbally. We have to see the foundation, trust, entity. So what are the trust states? We have to go through and understand what are the principal activity: hold, invest, manage asset, or something. So no business activity. Article 11 not triggered. So this Article 11 is another key point, or the key pain point for the family foundation. Because many things we may understand, but whenever the Article 11 is may trigger the risk factor, this is the important. Okay, then tax avoidance, beneficiary, we already mentioned the natural person or the qualifying person. The tax avoidance, no artificial arrangement. So this is, so here we already have the yes or no, if we got it, not got it, what are the supporting. So now let's see the case study. The case study, what is the case study? So we have to, I try to cover, but the time is short. But once we have the online session for this family foundation, we will cover in the detail. Here the case study illustrated purpose we added over here. Offline property, family foundation holding diversified passive investment. Here the word passive is the key for the family foundation. The passive investment. This word, because if we are doing the business, then it's the activity, but if we are doing the investment, then it's not our primary business activity. We are doing the investment, so that is called the passive investment. Through that, we are getting the our wealth preservation, or the getting the dividend or the income, but not through the active business activity. So anyhow, here the another is the for illustrative purpose we put the figures. This is not from any actual data. So let's assume one of the common example we seen in the UAE. So what is that? Offline property. Mostly in the offline property, from the developers, they took the couple of apartments in the key area of the Dubai, or the now Ras Al Khaimah also have the very good investment opportunity. But versus the mostly people prefer to the in Dubai, the Dubai Jumeirah and the Dubai downtown, and some other area also now the key beside the Dubai Maktoum airport, maybe depends, the many projects are there. So the offline property, they took the property from the developer under their under the family foundation name. Let's assuming 3 million they made the investment. So what would be the income outcome from this? So he will sell in the future, so come the capital, or if the property is ready, he might get the rental income. So this is what we are saying, the ready property is coming the rental income. But if in offline, so whenever in future is sale, it come the capital. The land normally come the land, vacant land held for capital appreciation. In UAE there is a couple of places, or the Emirates, where the UAE Emirates level they have freehold property, so that the foreign or the expat can own. Okay, the next is the residential rental property, complete apartment lease annually. So here we are getting the rental income. These values are 4 million, 5 million, but this is understanding purpose. The commercial property, what is the commercial property? Office unit lease to the corporate tenant. So one of the common the investment at the family foundation, and they getting the rental income. Listed shares, they purchase the shares. Now here the important part, shares via bank portfolio through the broker. So this is an important part, as we earlier discussed. If they do through the investment through the broker or the agent, so even directly if we're gonna do some activity, I'm not saying here directly, but I'm saying because who will manage these shares? If they have their own employees, then definition more likely towards the, if they have own employees or the own portfolio managers, so activity more look like they are doing the business activity. So anyhow, they through the bank portfolio, yes, dividend or capital gain they are expecting from their bank scope. Bank held fixed income instrument, this is the interest income profit. Then the equity investment, long-term equity investment, they will get the capital gain. We did in the last year also, and this year also we have the family foundation where we tested all this case and we get the all the supporting document. So anyhow, here the next part, VAT versus CT perspective. This is the another important part. Here we covered in a short overview pattern, but of course we are coming up with the detailed session where we'll cover all these details. Now here the another part, risk variant article 7 failure. So what are the risk factors that the outcome we might lose, the family foundation might lose the transparency. Transaction frequency, okay, 6 offline property units bought and sold within 18 months. So which means this is not the investment. If we keep rotating our frequency, so this look like we are doing the business activity. So now we have to look into that. Even I'm not saying it's business activity, I'm just highlighting this is the indicator for the business activity. This is what we are going through. Okay, 6 offline property they brought and sold, which means you're doing the trading. This is not the investment. Versus the family foundation, the original we said this is the investment, hold, invest and receive. Okay, so now, so this is the key difference. So we have to article 11 will give us the pain point over here. They trigger the taxable income. Okay, outcome we may fail for the transparency. Then the holding period. Again, these are the example for illustration purpose. This is not the hard and fast rule. Average holding period is less than 6 months. Okay, so now holding period, if less than 6 months, yes, this is the business indicator, short-term holding indicator, profit motive. But again, it might be we are doing through the broker. We given the standing instruction who's running your investment portfolio, then make things are different. Okay, FTA city guide business activity, we took the reference from there. Outcome we might fail. Okay, organization, dedicated property manager engaged. Of course, if we are buying and selling, so somebody will be there who's continuously monitoring this activity, right? But normally a family foundation do not have any employee, do not have any property manager. They are run through the trustee, but who's managing the investment. But if you have to buying and selling the properties or the shares, if you are doing through the agent, then it may be the different. Now even we are doing this activity but doing through the agent or brokerage, it may come in favor. We still meet our condition. But if we are doing ourselves through our channel, through our staff, through our resources, then there are high chances we might fail. Profit intention, consistent resale margin triggered. Of course, if we are doing the keep buying and selling, then it's not the investment. This is the trading. Okay, business indication, systematic profit seeking, then the GAR principle also apply. So there is the higher chances we might fail. Here the conclusion part in this risk variant. Again, this is the risk factor. This is not the decision. Family foundation would likely be regarded as carrying on a business under article as a result in loss. Okay. So Article 11 of the city law is very critical in this regard. Potential corporate tax exposure resulting in loss of transparency. Okay, cross-border scenario. Let's see the cross-border scenario. If the family foundation, they have the asset in the UK residential property, rental investment. It's not only if the person have family foundation in UAE, they cannot invest on the worldwide. Yes, they can invest in worldwide also. Okay, so again they are getting the rental income, holding period, business risk factor, no. Passive overseas investment, FTA point of view, yes, is a passive investment. This is the actual definition or the actual objective while having the family foundation. Legal reference, conclusion, transparency, retained. Again, this is the scenario. Okay, previous scenario risk factor, we are failure. Here we are meeting. US listed shares. Again, nature of asset, portfolio investment via bankers. What we are saying, if when we doing the activity through the brokerage or the agent, if we do with our resources, it might trigger the article 11. What is the article 11? We are potential risk factor, we lose the transparency. But if we're doing the same activity through the broker or agent, like the portfolio investment via bank, so we are higher chances will be retain the transparency. So dividend, then again the holding period, business risk factor. What is the business risk factor? It would not fall taxable business activity or business activity. Okay, FTA point of view, investment activity only. See FTA city guideline, natural person. The legal reference also there. We even anybody want to go and test from there. Transparency retained. Overseas land, Asia, vacant land, capital gain, long term, capital appreciation is good to go. Overseas property flipping, multiple short term disposal, trading margin less than 6 months. See again, if we keeps buying and selling, there is a higher chances we fall under the article 7, where they're saying we the family foundation or the settlers engage in business activity, so they run the transaction through the family foundation to avoid the taxation. Okay, this is the hard rule, simple definition for understanding. Okay, here let's take the DIFC or EDGM property norms. This sheet highlight norms where the property are located in the DIFC, clarify this free zone or does not itself create a corporate tax. It's not important the family foundation created in the DIFC or DGME, they will keep the family foundation over there, but this is the important factor. You have to check with them, either you need the NOC from them to buy the property in any other Emirates or Dubai or whatever the property you are buying. We have to check that part. Normally the agent with whom you registered the family foundation, he is doing this part. Normally the every whenever start such activity, buying and selling the property, you have to get the certificate from the relevant authority or the relevant free zone, that is the DIFC. That is the registered agent whose office is registered or who's appointed as that. He's running these things for you. Okay, here the DIFC, one of the example we took, residential apartment, what we are getting, rental income, long term, business risk, no, passive income, good, ADGMA, commercial office, rental income, long term, again business income, business city, business risk, no service provided. Another factor, if we are not providing any service along with the residential or the commercial property, yes, we are meeting the condition, or we may retain the transparency. Offline property, trading margin less than. See again, here the important factor is rotation, but it's not only one of the transaction, but we have to see the multiple factors at the same time to come on the conclusion we might lose the transparency or not. So this is the another part. Here we come up to the next, that is the holding period versus the risk matrix. This is the illustration purpose. Let's say the real estate, personal investment, holding period, any duration, frequency, occasional, FTA risk indicator, explicit excluded under the city. Okay, now here we are checking the CD cabinet decision 49. Business risk factor low. Business risk factor is low. Holding period, any duration. Now what we are seeing, the real estate, if as a business risk factor is low, legal reference city, cabinet decision 49, FTA likely views not a business, transparency retained, impact on the article 17. Real estate, let's see the next. Real estate frequent organized, short-term repetition. Okay, short-term repetition. Frequency is high, operation organization plus repetition. High, again, high doesn't mean it's made you lose the transparency. There is higher chances, but still we have to see what are the associated condition. As a whole we have to look at the substantive view, we have to look substance over, we have to check over there. The business may exist. FTA, see, this is what I'm saying. FTA, what FTA will look from the FTA perspective, because as a real estate in a natural person do any frequency. Okay, as the cabinet the cabinet decision 49 given the exclusion for the real estate to the natural person. Anyhow, shares and equity, any duration, low to moderate, share security, holding period very short. Okay, bond and scoop, no, any duration, low, passive income. See here the passive income, trading behavior. See, all together we have to check in this regard. Any let's move to the next. Okay, now here again we're gonna see the shares purchase and sale, frequency, flip risk analysis, scenario, occasional equity sales 6 months plus, or frequent share sale less than in a month we keep rotating. So same the volume, frequency, use of trading desk, yes or no. Business risk depends upon the all the transactions simultaneously, we have to look onto that. Now the numeric stress. The numeric stress, profitability and frequency threshold. Together we have to see the real estate holding period more than 2, annualization return less than 50%, risk factor is low. Real estate less than 12 months, annualization return more than 30%, high risk factor. This is the trading. So this is the where the it might trigger the article 11. So this is the critical part what we are testing on scenario base. Shares less than more than 6 months, annualized return. Even when we give to the FTA, we are preparing all the documentation what we are getting from the bank or the investment portfolio manager in this regard. Okay, so here we already seen that. Now the GAR. So let's see the GAR. So risk factor, property flipping, share trading, again all these things, but these things are coming commonly because these are the common activity normally done by the family foundation. So what are the additional factors that may give the indication to the trigger the GAR rule or business activity? Natural person income tax. When talk about the natural person income tax, we have to see the cabinet decision 49 as well, along with the article 11. Okay, the commercial property rental. Okay, the offline property. See, we given the rental, this is the passive. Offline property development capital passive, where the frequency coming higher, that giving the chances of to trigger the article 11. Listed shares, land appreciation, listed shares, scoop bonds. Okay, so passive, all wherever the passive, not active trading, yes, is good for the compliance with the family foundation. Natural person business test. Natural person business test, trade lessons held personally. Okay, no, is a passive. If he held trade lessons personally, beneficiary declaration lessons check. Okay, this we have to ask the trustee or the settlor. Do the organization have the employee? Of course, then they have the employee. They are running the business, because the passive income run through the broker or agent is not required to have the employees. The trustee can manage this function. Repetitive commercial transaction, no, good. Passive income, asset register or transaction log. How we know? Because if we check this asset register or transaction log, then we come to know, and even FTA will ask share these details, list of the asset, buying and selling, profit seeking activity. Now the next is the tax avoidance safeguard, business income park in foundation. See, we have to see the full transaction, end-to-end transaction, how is scanning. Either it's not coming the natural person or the beneficiary or the settler running the business and parking here. Conversion of taxable income into exempt income, same tax outcome as direct ownership. Temporary income settler, long-term structure, no timing arbitrage. Artificial arrangement. So we have to look the structure of the transaction and give to the FTA in a way. It should not be look like artificial arrangement. Unincorporated equivalency test, look through taxation effect, yes, pass. Income tax at the member level, pass. Foundation ignored for city. Okay, so this is the unincorporated partnership test. No commercial personality. So here we have to see the operating name, deed and confirmation, customer name and the contract register, employee, payroll review, active operation, trustee. See, this is the design to 360 view to analyze any family foundation. Is they are triggering to the taxable or no? Is losing the status of the transparency or no? Next is the activity through look effect. So we have to see the commercial leasing is a passive or active, property sale, offline, shares trading, holding. So we have to test all these things and it will give us the conclusion. While completing this this workbook, Excel workbook, is ensuring the transparency status. Asset pooling versus business. Professional asset manager, as we already discussed, wealth preservation, bank managed portfolio. Okay, if we have the professional asset manager, yes, then we will lose the status. Okay, joint venture. Okay, the joint venture operation, no. Okay, no operational JV, not a business. Commercial intent, no. Wealth preservation. See, again, all the things are moving towards the preserve the wealth, not the trading. Management control test. Rental rate review, administrative. Okay, protective, administrative, no. Share portfolio rebalancing, protective, the activity. See, property acquisition approval. Okay, trustee resolution, lease renewal only, bank advisory only. Frequent trading, no. Trustee resolution, pass. So again, here we are ensuring the criteria. Are we meeting the criteria? We have to see the management and control. Who's running the management of the family foundation? Normally run by the trustee. Okay, so now the next distribution versus taxability. Okay, the passive income, yes. Distributed, no. Still exempt. Passive income, yes. Distributed, yes. Okay. Distribution, if without qualifying public benefit entity, or the public benefit entity, if we don't have public benefit entity, then still we are meeting the condition. But if we have public benefit entity test, then the criteria may differ. We have to check the beneficiary of the trust is a natural person or the public benefit entity or the qualifying public and benefit entity, because the implication will be changed, the outcome will be changed, or additional test to be passed in that regard. Then the participation exemption test, again we have to see who is the ownership, natural person or the public benefit entities. So accordingly the scenario will be changed. The annual change log. Okay, here we have to trace the change track, keep monitor in this regard also. Okay, so now here we will come up some additional part, the risk heat map. Overall risk heat map, family foundation, real estate holding the passive, safe case pass, real estate holding, safe case pass, risk factor, risk variant fail. So from where it's coming, if the risk factor is may fail, so there is a chances of the losing the transparency status. Share investment, cross border assets, VAT versus city, management control. So all these are the key area where we have to ensure the risk factor of losing that. Client safe versus high risk. Okay, so we have to see the holding period whenever we take the client. So we will analyze quickly this part. So this will be the good as a understanding and the risk factor of taking while onboarding the client. So now we come up to the, let's move to the here. Okay, here the last and final in this regard, we are concluding almost 1 hour. So here we have to check whenever we are filling the previous, it will be populated or the decision conclusion will be evident. Overall result not eligible, article 7 business identified. So accordingly we have to see business tells fail, how many is failed, taxable income, note where the cabinet decision override, article 11, this is the participation business exemption, overall conclusion prepared by here whoever is working on that. So this is the comprehensive family foundation, the practical workbook that we have, and the working paper, and the same can be used for the application of the family foundation or the declaration. Happy New Year. Today is the 31st December. Keep watching our YouTube channel and subscribe us to get the latest update. Happy New Year. Thank you very much. Ghazanfar Hussain from PTG Consultant. We are the registered FTA agent for the taxation. So contact us in case you need the further support in this regard. Thank you. Happy New Year.